Good morning, everyone. Thank you for joining us this morning. Today's presentation will be discussing the transfer of funds process related to California state preschool programs. This webinar is being presented by the Early Education and Nutrition Fiscal Services Unit of the Fiscal and Administrative Services Division. And for those that do not know me, my name is Corey Kahn. I'm one of the managers over the Early Education and Nutrition Fiscal Services Unit. And today I'm joined by some of the EENFS fiscal analysts and managers. So before we get started, I want to just go over a few housekeeping things. So first, we've disabled the chat box for participants, although EENFS staff will be using this feature to share links with you all. So I believe the panelists will be able to use the feature, just not the participants. And then I know that many of you are interested in receiving a copy of this presentation. So this presentation is being recorded, and we will work on getting this presentation posted in the next couple of weeks. And in some of our slides, we'll go over where the webinars are posted on our website. And then our team is committed to being as responsive as possible, but we may not get to every question. But we do ask that you use the Q&A feature to ask us questions. And when you do submit a question, just please be sure to give as much detail as possible. We oftentimes have moved on to something else before getting to your question in the Q&A, and the staff here sometimes won't know the context in which you are asking it. So having as much detail as possible will just ensure that we're being as responsive as we can. And then also, as time permits, we will facilitate a live Q&A session at the end of the presentation. And during this session, if we do have time, we'll go over some of the frequently asked questions that have come through during the session. We will also allow participants to raise your hand, and then we can call on those to speak and ask their questions live. And then we'll answer it live or try to answer it. And then, of course, if we're not able to get through all the questions, we'll try to reach out to you if you've left some sort of identifying information, typically your name. Sometimes I see even on the participant list, it says someone's name with their agency. So that's just helpful. If we aren't able to get to everyone, we can sometimes reach out to you individually. And then also, we might also use any of these questions to develop more frequently asked questions. We have frequently asked questions posted on our website already. And if there's anything that we haven't addressed in those, we will use these to post more. So this should be a fairly short presentation, but I'm going to turn it over to one of our presenters this morning, Janelle Otani, to kick us off on our webinar this morning.
Thanks, Corey. My name is Janelle Otani, and I am an analyst in the Early Education and Nutrition Fiscal Services Office, or EENFS for short, at the California Department of Education. Today, myself and my colleague Jennifer Chacon will be discussing the transfer of funds, which includes intra-agency transfers and voluntary temporary transfers. During this presentation, we will be going over the various transfer of funds available to the California state preschool contractors. Topics that we will be discussing today are what is a transfer, the different types of transfers, such as intra-agency transfers between CSPP and CCTR, voluntary and temporary transfers within the county, when a transfer would be beneficial, the requirements, application process, and approval process for each type of transfer. And finally, we will review what happens when an agency received a transfer but did not earn it all, which we refer to as unearned VTT. So first, what do we mean when we say a transfer of funds? A transfer of funds is the process of temporarily releasing or receiving funds from one contract to another. Contractors can temporarily request additional funding or temporarily relinquish unearned funds during the fiscal year if they are projected to over or under earn their contract maximum reimbursable amount, or MRA. Transfers may only be requested for the current fiscal year. Approved transfers are temporary, meaning these are one-time transfers and the transfer amounts will be reverted in the next fiscal year. Funds can only be transferred from an under-earning contract to an over-earning contract. There are two types of transfers available. First is an intra-agency transfer, which is available to non-local educational agencies or non-LEAs who hold both a California State Preschool Program, CSPP, and a General Child Care, CCTR contract. There are two opportunities when a non-LEA contractor can request a transfer of funds and amend their CSPP and CCTR contracts: January 1st through 15th and April 1st through 15th. Next is a voluntary temporary transfer, or VTT, which is available to all CDE contractors and is a transfer of funds between two CSPP contractors. There are two periods for all contractors who request a VTT within their county between another CSPP contract: November 1st through 15th and May 1st through 15th. Next, we will discuss when a transfer would be beneficial. During the fiscal year, a contractor may be projecting to over-earn or under-earn their CSPP contract. When a contractor is projected to over-earn, it means that the projected adjusted contract earnings, minus any exceptional needs severely disabled service level exemption credit, exceed the contract MRA. When a contractor is projected to under-earn, this means that the projected adjusted contract earnings are less than the contract MRA. Please note that the exceptional needs severely disabled service level exemption credit is not considered when determining over-earnings for transfer purposes, as this credit does not tie into actual expenses that the contractor is incurring, and rather is a mechanism for the CDE to advance funding to serve children with disabilities as required by Education Code Section 8208. We will not be going over much detail about this credit and requirement to serve children with disabilities in this presentation, but did need to mention it for the purposes of calculating over-earnings. We have recorded and posted more in-depth fiscal webinars that cover various topics, including the exceptional needs set aside that was conducted on January 8th, 2025. The fiscal webinars and trainings, as well as the associated FAQs page, can be found at https://www.cde.ca.gov/fg/aa/webinarsandtrainings.asp. And we have dropped the link in the chat. We'll discuss the first type of transfer, known as the intra-agency transfer. Education Code Section 8216 states that the California Department of Education and the Department of Social Services shall arrange intra-agency adjustments between CSPP and CCTR contracts for the same agency and funding allocation in an effort to promote the full utilization of child care and development funds and match unused funds with identified service needs. LEA CSPP contracts are funded with Proposition 98, which is a different fund source than non-LEAs, and therefore are ineligible to participate in transfers between CSPP and CCTR. In order to participate in an interagency transfer, contractors must be a non-LEA and hold both CSPP and CCTR contract. The contractor must have one over-earning and one under-earning contract. Requests must also be submitted within the stated transfer periods. Remember that the intra-agency transfer period is January 1st through 15th and April 1st through 15th. Transfers between contracts can only be requested for the current fiscal year. All approved transfers will be reverted in the next fiscal year. Now let's take a look at how to determine when to submit an intra-agency transfer request. Here are two scenarios where contractors' projected contract earnings appear to exceed the contract MRA, and this contractor would want to submit an intra-agency request of $40,000. Using the lines from the CSPP contract earnings calculation sheet, both examples have an MRA of $700,000. In example A, the projected adjusted contract earnings is $740,000, which includes the service level exemption credit of $60,000 and is in excess of the MRA. Remember that the credit is meant to inflate actual earnings in order to advance funds to the contractor for future enrollment of children with exceptional needs. Therefore, the credit of $60,000 is subtracted when determining the actual transfer need, resulting in the projected adjusted contract earnings of $680,000, which is less than the MRA. So for this example, the over-earning amount is 0, and a transfer request would not be necessary. For example B, the contractor's projected adjusted contract earnings is $800,000, which includes the service level exemption credit of $60,000 and is in excess of the MRA. When the credit of $60,000 is subtracted, the projected adjusted contract earnings is $740,000, which is still more than the MRA. Therefore, this contractor would benefit from submitting a transfer request of $40,000. Please note that if the amount of funding requested to be transferred is not supported by the most recent contract earnings calculation sheet, EENFS may request additional justification, and the contractor may submit supporting documentation to the fiscal analyst for approval. Now let's take a look at a contract earnings calculation sheet from CPARIS using example B from the previous slide of a contractor that is projected to over-earn their CSPP contract based on their net reimbursable expenses. The projected adjusted contract earnings is $800,000, in which we would subtract the exceptional needs credit of $60,000 to get $740,000, which is above the MRA of $700,000. In this example, since the contractor is projected to over-earn their contract by $40,000, this contractor would benefit from submitting a transfer request for approval. Now let's take a look at two scenarios where the contractor's projected adjusted contract earnings appear to be below the contract MRA. If wanting to participate in a transfer to release contract funds to an over-earning CCTR contract, you would not subtract the service level exemption credit from the projected adjusted contract earnings, as this amount is advanced and shall be retained by the contractor to enroll children with disabilities as required by Education Code 8208. Let's say the CSPP contractor wants to submit an interagency request of $100,000. In both examples, the MRA is $700,000. The exceptional needs severely disabled service level exemption credit is $60,000, and the projected adjusted contract earnings with the service level credit is $600,000. The recommended transfer for an under-earning CSPP contractor should be up to the difference between the contract MRA and the projected adjusted contract earnings with the credit, and in no case can their MRA be reduced below the amount paid to date. In example A, the apportionment paid to date is $650,000. So even though the contractor is under earning their CSPP contract by $100,000, only $50,000 would be allowed to be transferred because the MRA cannot be reduced below the year paid to date. For example B, the apportionment paid to date is $540,000, and the contractor is under earning their CSPP contract by $100,000. Therefore, this contractor would be able to participate and release up to $100,000 to the over-earning CCTR contract. Now we'll take a look at the contract earnings calculation sheet of a contractor that is projected to under-earn their CSPP contract. We'll be using example B from the previous slide. The MRA is $700,000. The projected adjusted contract earnings is $600,000. And note that we are not subtracting the service level exemption credit because the projected adjusted contract earnings is below the MRA. As the apportionment paid to date is $540,000, this contractor is under earning and can transfer up to $100,000 of their MRA to the over earning CCTR contract. Contractors must complete and submit the CSPP Transfer Request of Funds form and the California Preschool Accounting Reporting Information System, or CPARIS, by the deadline, which is either January 15th or April 15th. As a reminder, only CSPP contractors who also hold a CCTR contract should submit a transfer request. To access the form, the agency's authorized representative will navigate to the Agreements menu and then select the Transfer Request for Funding submenu. After selecting the transfer request for funding, it will display the contractor's CSPP contract during the transfer period. To access the form, the user will select Create, located on the right-hand side, to open up the CSPP transfer request form. After selecting Create, this is an example of a transfer request form for CSPP 5999. CPARIS will pre-populate the CSPP agreement number. Contractors must enter the requested amount to transfer to or from the CSPP contract. If you are intending to transfer from a CSPP to CCTR contract, the amount entered will be a negative number, indicating that you want to reduce your CSPP contract MRA. If you are intending to transfer from CCTR contract to CSPP, the amount will be a positive number, indicating that you want to increase your CSPP contract MRA. In this example, the contractor has entered a positive $40,000, which indicates that they are requesting that $40,000 be transferred from their under-earning CCTR into their over-earning CSPP contract. Next, the authorized representative of the agency will fill out the contact information, such as their name, phone number, and email address, and select Save at the bottom of the page to submit the request. Please note that submitting a transfer request in CPARIS is only for CSPP. The corresponding CCTR transfer request must be submitted to DSS. For more information on how to submit the corresponding CCTR transfer request, please contact the assigned DSS fiscal analyst. Now that the contractor has submitted their request to CDE, let's talk about the approval process. The Early Education and Nutrition Fiscal Services, or EENFS, will evaluate the request and determine whether the transfer amount corresponds with the contract's projected contract earnings. If the request is not supported by the contract's projected contract earnings, EENFS may request additional justification. The decision to approve or deny the CSPP CCTR transfer request will be made by CDE and DSS, and all parties will be notified of the outcome. The CDE and DSS fiscal analysts will work together to decide if the transfer amount corresponds with the contract's projected fiscal year contract earnings and determine if the transfer is necessary and justified. All requests are subject to individual approval, and the decision will be made by the department releasing the funds, and there is no guarantee. Requests to transfer a significant portion of the contract MRA may require approval from the Early Education Division. All approved requests will be processed via an allocation letter, which does not need to be signed and returned to the CDE. Now I will pass it off to my colleague Jennifer, who will be discussing the voluntary temporary transfers, or VTTs.
Thank you, Janelle. Hello, my name is Jennifer Chacon, and I'm a fiscal analyst in EENFS. This leads us to the second type of transfer, known as voluntary and temporary transfer of funds, or VTTs. Per Ed Code Section 8256, the CDE shall arrange interagency transfers between different contractors with the same type of contract when both agencies mutually agree, an effort to promote full utilization of CSPP funds and match available unused funds with identified service needs. VTTs are available to both LEAs and non-LEAs. Transfers between same type of contract means that CSPP funds can be transferred from an LEA to an LEA or from a non-LEA to a non-LEA. Let's go over some requirements for VTTs. The contractor must be in full compliance with the contract terms and conditions, CT&Cs, fiscal reporting requirements, regulatory requirements, and statutory requirements. They must be able to utilize funding immediately to serve additional days of enrollment or are already projected to exceed their contract MRA based on service earnings and net reimbursable expenses. Requests must be submitted within the stated transfer periods. Remember, VTT transfer periods are November 1st through 15th and May 1st through 15th. Now let's take a look at two scenarios where a contractor's projected contract earnings appear to exceed the contract MRA. This is going to look similar to the example Janelle showed. However, for VTT, there is another factor to consider: service earnings. In both examples, the MRA is $700,000. The exceptional needs severely disabled service level exemption credit is $60,000. The projected adjusted contract earnings is $800,000, which includes the credit. Remember, the credit is meant to inflate actual earnings in order to advance funds to the contractor for future enrollment of children with exceptional needs. When the credit of $60,000 is subtracted from the projected adjusted contract earnings, it is $740,000. For example A, the contractor's total projected service earnings are $695,000. The contractor appears to be over-earning their contract by $40,000 from their cost. However, in order to receive a VTT, the contractor must be able to utilize funding immediately to serve additional days of enrollment. In this example, the service earnings are below the MRA. The amount of VTT supported by the CFCP service earnings is 0, and a transfer would not be necessary. For example B, the contractor's total projected service earnings is $735,000. And again, the contractor appears to be over-earning their contract by $40,000 from their cost. In this example, the service earnings are $735,000 and above the MRA. The amount of VTT supported by the CCP service earnings is $35,000. The contractor could benefit from submitting a transfer request of $35,000. Now let's look at a contract earnings calculation from CPARIS using example B from the previous slide of a contractor that is projected to over-earn their CSPP contract based on service earnings and net reimbursable expenses. In this example, the exceptional needs credit is $60,000. The MRA is $700,000. The service earnings is $735,000. And the projected adjusted contract earnings with the credit is $800,000. We subtract the credit of $60,000 from the contract earnings of $80,000 to get the contractor's actual earnings without the credit of $740,000. However, for this example, even though the contractor is projected to over-earn their contract by $40,000 from their cost, the service earnings are $35,000 above the contract MRA. The contractor could benefit in submitting a transfer request of $35,000. Now, how to submit a VTT request. Contractors will fill out letters of request, attachment B or attachment C, and submit to their LPC coordinator or their EE/NFS fiscal analyst. The LPC coordinator will review and forward all attachments to the EE/NFS fiscal analyst, regardless if there is a match in the county. Additional information regarding the VTT process, including all attachments, are located on the CDE website found at https://www.cde.ca.gov/FG/AA/VTT-resources.asp, and the link will be dropped in the chat. The link provided on the previous slide will bring you to the VTT webpage shown here, where you can find additional guidance on VTT request, a link to contact information for LPC coordinators for each county, attachment A, which is for the LPC coordinator to complete, attachment B, if wanting to request to release funds, attachment C, if requesting to accept funds. Now let's take a look at attachment B and C forms that would need to be filled out if wanting to participate. So by clicking the link previously dropped in the chat to the VTT resources page, you will find the forms that need to be downloaded, filled out, and emailed to the LPC coordinator or the EE/NFS fiscal analyst. On the left is attachment B, which is the form to release funds. If you are under earning your contract and want to participate to release funds, you would click attachment B. On the right is attachment C, which is the form to accept funds. If you are over earning and wanting to request additional funding, you would click attachment C. By completing both attachment B or C, the contractors agree to the terms of the VTT process. Once attachment B or C are filled out, and the request should be emailed to the LPC coordinator or the EENFS fiscal analyst for the county by the deadline. The approval process for VTTs is similar to the interagency transfer approval process. EENFS will review all VTTs submitted and will determine whether the amount of transfer corresponds with the contract's projected service earnings and contract earnings for all contractors involved in the transfer. As with intra-agency transfers, EENFS may request additional justification. VTT approvals or denials will be made exclusively by CDE, and all parties will be notified of the outcome. Please note, transfers are not guaranteed. And again, request to transfer a significant portion of the contract MRA may require approval from EED. All approved transfer requests will be processed via an allocation letter, which does not need to be signed and returned. Unearned VTTs. Funds received through the VTT process must be used to serve additional days of enrollment and must be fully expended by June 30th of the fiscal year. If an approved VTT was not fully earned during the fiscal year, at year end, unused funds cannot be transferred into a preschool reserve account or earned through an exceptional needs, severely disabled service level exemption credit, which would then become deferred revenue to be used in a future fiscal year. If the contractor did not fully earn the amount of funds received through a VTT, a contract amendment will be issued to reduce the contract MRA by the amount of the VTT unearned. Letters will be sent to notify the contractor of the upcoming amendment. After the amendment is fully executed, an invoice will be sent to the contractor to recoup the unearned VTT amount. Please do not send payment until an invoice is received, as all payments must be accompanied by an invoice number. Now let's go over a few examples. If a contractor did not fully earn the amount received through the VTT process, a transfer to the reserve may occur upon calculation of the June year-end report or audit report. Here's an example of a transfer to the reserve caused by a VTT. The contractor has an MRA of $700,000. A VTT was approved for $40,000, bringing the MRA with the VTT to $740,000. The total service earnings is $740,000, which is in line with the MRA. However, the actual adjusted contract earnings is only $735,000, which is below the MRA of $740,000. We look at the adjusted contract earnings because in a hold harmless year, contract earnings are the reimbursable net cost. This could cause a transfer to the reserve if the contractor has a preschool reserve account and the reserve is not capped at the reserve max limit as the service earnings exceed the reimbursable cost. In this example, by taking the service earnings of $740,000 and subtracting the actual adjusted contract earnings of $735,000, this would cause a transfer to the reserve in the amount of $5,000 that otherwise wouldn't have been received. Funds need to be used in current year and cannot be received as a transfer to the reserve which would then become deferred revenue to be used in a future fiscal year. In this example, the contractor did not fully earn the VTT amount and as a result received a transfer to the reserve of $5,000. This amount would not have otherwise been provided had the amount of VTT funds received aligned with the actual contract earnings. Now let's take a look at the example as it appears on a June year-end contract earnings calculation. We have the MRA with the approved VTT of $740,000, the service earnings of $740,000, the actual adjusted contract earnings of $735,000. Then a transfer to the reserve is indicated in the amount of $5,000. The service earnings minus the cost to get the transfer of $5,000. This would not be allowable as funds accepted by the over-earning contractor cannot be transferred into the preschool reserve. A contract amendment would be issued to reduce the MRA by the amount of the VTT unearned to recoup the unearned revenue, as the transfer to reserve indicated above shall not be retained as deferred revenue. Now let's take a look at an example of an over-earning contractor that earned an exceptional needs severely disabled credit, which is not allowed through the VTT process upon calculation of the June year-end report or audit report. The MRA is $700,000. The approved VTT is $40,000, bringing the MRA with the VTT to $740,000. The actual adjusted contract earnings with the credit is $790,000. The exceptional needs credit is $60,000. And then the actual adjusted contract earnings without the credit is $730,000, which is the contract earnings of $790,000 minus the credit of $60,000 to get the true cost without including the credit, as the credit is not tied to any expenses, of $730,000, which is identifying the actual contract earnings without the credit. Then subtracting the $730 from the MRA of $740, resulting in a calculated credit of $10,000 that otherwise wouldn't have been received. Again, funds need to be used in current year and cannot be received as a credit, which would then become deferred revenue to be used in a future fiscal year. In this example, the contractor did not fully earn the VTT amount and as a result received a credit of $10,000. This amount would not have otherwise been provided had the amount of VTT funds received aligned with actual contract earnings. Now let's take a look at the example as it appears on a June year-end contract earnings calculation. The exceptional needs severely disabled credit of $60,000, the MRA with the approved VTT of $740,000, the actual adjusted contract earnings of $790,000, and again, we take the contract earnings of $790 minus the credit of $60,000 to get the true cost without the credit of $730,000, which is identifying the actual contract earnings without the credit. Then subtracting the $730 from the MRA of $740, resulting in a calculated credit of $10,000 that otherwise wouldn't have been received. A contract amendment will be issued to reduce the MRA by the amount of the VTT unearned to recoup the unearned revenue, as the unearned credit indicated above shall not be retained as deferred revenue. In this example, there was more money requested and transferred during the VTT process than needed. If the VTT was only $30,000, then it would have aligned with the true cost without including the credit, and this contractor would not have received a credit as all funds would have been spent in current year. Before we wrap up and move on to questions, let's discuss the key takeaways from this presentation. There are two types of transfer requests. Intra-agency transfers available to non-LEAs only who hold both a CSPP and CCTR contract. Voluntary temporary transfers, VTTs, available to all CSPP contractors. Both transfers are intended to promote the full utilization of contract funds. Transfer requests are not guaranteed, and therefore, contractors should not purposely over-earn their CSPP contract. All approved transfers are temporary, and funds will go back to the contract in which it originated from in the next fiscal year.